Move our focus to the fixed income space, and I am joined by Thaddeus Udegbe. He's a fixed income dealer at Diamond Bank. Thaddeus, it's good to have you on the show today. Let's get straight into it and start. Of course, the bond market pretty quiet yesterday as yields went up marginally across major benchmark maturities. So start by giving us an update on trading in the bond space today.
Thank you for having me. Today at the bonds market, we've seen a very bearish market, basically as a result of the expectation of bond auction that is coming up tomorrow. At the bond auction of tomorrow, DMO is offering about 110 billion worth of treasury bonds, 110 billion worth of FGM bonds in 4 maturities of April 2015, April 2017, June 2019, and July 2030 maturities. If you take a look at the last auction in April, the DMO sold the 5-year, 7-year, sorry, the DMO sold the 7-year, 10-year, and the 20-year bucket at an effective yield of about 11.5%, 11.15%, and 12.59% respectively. Now, if you look at what these bonds are trading at the moment at the secondary market, the 20-year currently is at about 11.78%, and of course the 5-year is currently at about 11.68%. And of course, if you look at the demand at the secondary market that we saw today, of course today the secondary market we saw some bearish sentiment, which means that investors are taking profit on the portfolios that are in the money and also expecting to bid at the auction tomorrow. So if you look at the developments at the secondary market, one would agree with me that the yield on the 20-year bond will come in slightly lower than the previous top yield, while the yield on the 5-year and the 7-year bucket is expected to come in slightly higher than the last stop rate, very close to where market is trading currently at 11.7 and 11.9%.
Now, of course, we anticipate the bond auction tomorrow. So what's your expectations for trading in the bond market for the rest of the week?
Typically, the auction will be held tomorrow. We're already seeing some bearish sentiments today as a result of the auction. However, the direction of yield in the next couple of weeks will be dependent on the outcome of the auction tomorrow. For now, market players are watching to see the outcome of the auction. However, we believe that the auction will be deeply subscribed.
So what bonds do you see as attracting the most interest?
Okay, at the moment, everybody is looking at the 4% April 2015 maturity. This maturity, at the moment, it has the lowest duration at about 1.6 years. I think investors would look at it, particularly if you look at the major players in the market, the deposit money banks. They constitute about 60% of activities in the market. So if you look at their portfolio, if you look at their deposit liability base, you find that looking at the nature and the structure of their deposits, they will prefer more of a short duration bond. That is why I think most interest will be on the 7% April 2015 maturity.
Let's move on to the T-bills market. Of course, 261 billion in OMO maturities expected this week. So, of course, many are expecting further OMO auction. So, give us an update on trading in the T-bill space today.
Yeah, before I take you through that line, I would like first of all to tell you that yesterday the CBN sold about 133 billion naira worth of treasury, worth of OMO bills in 2 tenors of 178-day and 164-day at a stop yield of 13.14% and 13% respectively. Part of what is driving activity in the treasury bills OTC market today was that auction that was held yesterday, the OMO auction that was held yesterday. So as a result of that auction, we saw players selling down their portfolio, taking profit, and also hoping to bid at subsequent OMO that we are expecting maybe on Thursday. Like you said earlier, on Thursday we have about 260 billion worth of bills that will mature into the system. But we expect CBN, as part of its tight monetary policy, to mop up that excess liquidity that we're expecting on Thursday.
Now, headline inflation for April expected to be released next week. So talk through your expectations for inflation numbers.
Yeah, of course, inflation came in at a 5-year low of 8.5% in March, which we expect was driven by decline in food and energy prices. However, a number of analyst reports that came out last week are looking at inflation for April coming in at 9.2%, which is a slight uptick from what we saw in March. As I speak to you, market had not factored that into, had not priced in that in the securities market. What the market at the moment is pricing in is the auction that we expect tomorrow. So the latest inflation projection, which is about 9.2% for April, is basically driven by an uptick in food prices.
Do you feel that the market has already priced in those numbers?
At the moment, I don't think market has effectively priced in the expected rise in inflation. I think what the market, like I earlier pointed out, is pricing in right now is the auction that is expected tomorrow.